Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 13th, 2022. And this is your warning right now. You have one day to go get some flowers and chocolates for your loved one, because tomorrow is Valentine's Day. At least we observe it here in the United States, so you can thank me later for that. I hope you guys are having a great weekend. Look, we're going to get to the analysis here in just one second. But I want to say, if you haven't been to this site yet, you see what we're looking at. This is the Supercharge Your Trading webinar. You have to register for this. It is on Tuesday of next week. It is a surprise. It could quite possibly change the way you trade from here on out. So make sure you go to the webinar to find out more, okay? Also, I got to say, if you haven't tried out Forex Analytics, you might as well do so. It's just $1 for 10 days to try it out. You get the premium version. Download the mobile app, join our community, jump in our chats, see all the webinars that we do specifically for Forex Analytics clients only. That's aside from the free F.A.C.E webinar that we do every day that anybody can join. Yes, and see this tool that we have made for traders, built for traders, by traders. I know everybody probably uses that same tagline, but you know, we did build this and we've been trading for a long time, myself and the rest of the team. So make sure you check it out. I am going to go through charts right now because all the analysis being updated to the Forex Analytics site over the weekend and through the mobile app and everything else. So I'm just going to go through live charts as I do here every single weekend. So you notice the first chart that I pulled up. Now this was the free chart of the day. Actually, on I think I put it out on Thursday night for Friday on our site. It's on the blog. This is the AB equals CD move in the bonds, and the bond market. I've talked about it a couple of days this last week. One on the trade-off show that we did with Pepperstone Securities. I talked about how bonds were reaching pretty big level of support. This is multi-year range that you can see here. We're at the 618 retracement. So I figured there'd be a bounce, and you notice how we closed right at the 618, basically going into the end of the week. That was helped by the potential of Russia, invading Ukraine. Now, this has obviously sparked a lot of volatility in the currency markets, and you can see, the best way to display that is look at the euro dollar over the course of the last 48 hours of trading. A lot of volatility there, and this one right here was Bullard. We can thank Bullard for that, and if you're a euro dollar bear, you can thank Russia for the nice pop lower late on a Friday. I'll tell you, and I'm going to tell you this right now. I'm still long some euros. I closed out my euro US dollar long. I was actually, it's Friday afternoon. I was away from my desk. And of course, the risk of a Russia invasion of Ukraine escalated there late in the day on Friday, caught me off guard. I got out of my longs, took a loss, which really stinks because I was actually having a really good week up until Friday. And then Friday, it kind of zapped a lot of my profits. And I was like, man, that's a bummer. But you know what? You can't control those things. I mean, if you were on the right side, you got lucky. And if you're on the wrong side like me, you got unlucky. I mean, I can't control what Putin's going to say, right? And that's the same thing with like the Bullard move. The euro dollar actually looked like it was going to break 115, and then Bullard opened his mouth. Speaking of which, next week we do have a lot of Fed speakers, and now everybody wants to know what Bullard voting member is going to say, and he's actually talking on Monday and I think on Thursday or something. So, we have a lot of Fed speak going into next week. On top of it, the Russian situation is very fluid, and things can change between when I'm filming this on a Saturday to when the market opens tomorrow, the day that you're watching this. Things can change. They can change dramatically. So keep an eye on your news channel, your favorite news channel, Twitter. If you follow Twitter, Twitter's I find always a good source for breaking news. You tend to find your news out there before it's reported on Fox News or CNN or whatever you're watching, wherever you're watching it. Twitter's tends to be everything breaks first and then it gets reported. So anyway, reason why I bring that up is because, like I said, things are moving at a pretty rapid rate and volatility is high. Speaking of volatility, we should probably look. You can see the VIX, close the week, up in the 20s after a spike into the 30s. A lot of people believe that this Russia invasion, it's, look, if I was going to invade Russia and I was Putin, I would have done it and no one would have found out about it. But, obviously, I think there's a lot of games going on. The fact of the matter is we might see things subside a little bit on Monday morning should there not be a Russian invasion, or it looks like things have de-escalated. It looks like there's a lot of talks happening. So there's that to think about. Now, what I do want to really talk about this week is I want to talk about the importance of where we're at. Let's go over to the dollar index. This is going to be really important to see. So the dollar index, I want to show where we pivoted at the end of the week, or by the end of the week. We held the ascending trend line. Now, this ascending trend line, the reason why it's important is that you go down to these three lows back in May of 2021. If you connect those with the low that was in January, that we retested that low actually this last week. We held it. Like I said, at one point on Thursday, it looked like we were going to break down this flag pattern, if you will, right? This flag pattern looked like it was going to break down, and then, like I said, Bullard, opened his mouth, and then we reversed, and we're back up at the 38% retracement. Now, depending on what happens over the weekend, the one thing that we have to think about is if it seems like there's a bit of a de-escalation, we'll see the dollar index actually pull back from this 38% retracement. You know that the market's a little freaked out when the dollar firms up and you have gold, breaching a, key level resistance triangle. Now, that's one of the other things too. If there is a de-escalation over the weekend, the dollar may come down and gold may come down. Now, typically gold and the dollar have inverse relationships. That means they go, sorry about that. They go opposite directions most of the time. But when there is risk aversion and people are truly fearful, you'll see gold and the dollar rally at the same time. And that's what we saw actually on Friday. And guess what? On Monday, Tuesday, if it looks like the situation is de-escalating on the Ukrainian-Russian border, and there's talks happening between the US and Russia, then you might see gold also come down, and then also the dollar come down. Now, the risk of that, and I want to talk about the risks to gold right now, specifically, because gold really broke some pretty key resistance. And notice that we closes the week above that resistance. So imagine you're a gold bear, and come Friday, it was Friday late in the day, you're pretty aggressively short gold. You've been building the short gold position, and all of a sudden, late on Friday, you get stopped out because it goes above these highs, and you're like, damn it, I guess I'm not going to be short anymore. It looks like it's breaking out, so I got to not be short. Well, let's say next week things de-escalate a little bit and gold actually succumbs. People start stepping in and selling. Well, then you have a false breakout to the upside, which tends to bring a move to the downside. Now, next week, we do have some inflation data. On Tuesday, we have producer prices, which are going to be watched very carefully. Canada's got CPI, and inflation is, in my opinion, more important than the jobs picture right now. Even in the jobs report, everybody's looking at the wage data, that inflationary data. Producer prices and CPI are definitely on everybody's radar. And if we are starting to see some pressures come off from a producer level, then people might believe that we have seen a peak in consumer price and CPI going into next month. So something to think about, because if that happens and next week, let's say PPI is not as hot as everybody thought, and everybody goes, "Ooh, maybe the producers aren't going to pass that down to the consumers after all," and CPI starts to come down. Well, gold would succumb to selling pressure, and like I said, technically, we had a false breakout to the upside. If it reverses, false breakouts usually lead to breakdowns, and that's the way I look at it. So that's gold. That's something I want to talk about just because it was it broke out on Friday. Another thing that broke out on Friday is crude oil. Now, I want to talk about crude because everybody's worried about an escalation in Russia. And if that happens, then crude oil prices are going to spike above 100. It's possible. It is possible. But we are in this, I would say an ascending channel in two of them, really. You can see the red dotted one and then the blue one. We pretty much probed that red, resistance, and look at relative strength, continues to diverge. It is overbought and divergent. And so if we do get some sort of de-escalation, and by the way, I hope we get a de-escalation. I mean, no one wants Kiev or any part of the Ukraine to be bombed and innocent people. I mean, let's just hope for everybody's sake we get a de-escalation. But if that does happen, and let's say it's just Russia, taking advantage of the situation, playing games with the U.S. administration, and if that's the case, and they start talking a little bit, then maybe crude oil might come off some. And you have to realize that we are up against some pretty, I feel, pretty key technical resistance. So only a dip back below 90, and then we'd see some of this downside pressure come off. That's just something that I'll be looking at because I'll also be focusing on gold too. So if gold breaks down, crude oil turns around, then that's going to trigger a response from me as a trader in currencies. So that's why we start looking at the dollar and say, well, if inflationary pressures come down, dollar index, had a probe of this 38% retracement. I have not given up hope at this point that the dollar, oops, that's not what I wanted to do. Hold on one second. Let me grab this red line here. I have not given up hope at this point that the dollar is still developing a bear flag pattern that's, eventually going to take us back to the 200-day moving average. You can see the 200-day moving average is around 93.50, 93.60. So a lot hinges on what's happening in Russia, which, none of us have control over. Obviously, you know that. And it's very fluid, so we have to keep an eye on the news wires. And then also, there's actually probably three components to this. Also, the inflationary data that's coming out this next week, the producer prices. Like I said, Canada is dealing with CPI, but we got U.S. producer prices. We also do have retail sales in the U.S. and in Canada and in the U.K. All those numbers are going to be pretty important because we want to see how the consumer is actually absorbing these higher prices, right? Because I've heard this a couple of different places. The cure for high prices is high prices, right? If prices go up enough, consumers will not spend, and then prices come back down again. So, that's why we have to watch consumers and see how they're responding to these higher prices. And by the way, retail sales data will be on Wednesday of this next week. So there's a few things that we need to unpack. Then the third thing that we all have to pay attention to is we have to pay attention to the Federal Reserve's mouthpieces that are running around amok going into this next week. I mean, we have Bullard speaking. ECB President Lagarde she's speaking on Monday. Bullard speaking on Monday. We got Bullard speaking again on Thursday. We got Meister speaking on Thursday. I'm sure I probably missed a few other, we got Waller speaking on Friday. We got Brainerd on Friday. Like I said, I'm sure there's even more. It's just, we got to listen to these Fed members because also next week is going to be the FOMC meeting minutes as well. Let's talk about a couple other charts that, like I said, things got a little messy on Friday because of, a situation that's beyond my, or the market's control with Russia. It's kind of threw a monkey wrench in a few things that I was thinking, like, the Aussie dollar was bullish. I took my Aussie dollar longs off just so you guys know. But I was looking to buy dips down to the 71.40 level. I bought them, I think on Thursday, and then I sold up here, and I was going to buy it again, on this dip, but obviously because it's dipping because of Russia, I've thought twice about that, and I'm not going to be doing that now. But you can see the Aussie's approaching some pretty key support. I think around the 71 cent level. Like I said, next week we have the Australian employment data Wednesday afternoon or Thursday morning if you're in Australia. So that's something that we will be paying attention to. I do think that the Aussie dollar overall is bullish, but hey, if things erupt in Russia, in Ukraine, all of that goes out the window, right? That because the dollar then becomes the default, de facto safe haven asset that everybody's going to be buying. All right. One of the other things I wanted to bring up with you guys today, because it is so vitally important, is the US dollar Japanese yen. I was really looking at this US dollar Japanese yen prior to Friday. I was looking for it to reach up towards 117. If you guys don't know why that level is so important, let's go over to the weekly chart. Let me just pull it out and actually zoom out as far as we can go. This peak right here was in 1998. This peak was in 2015. 117 would have came in. We probably would have been testing it on Friday, or maybe even early next week if what happened on Friday didn't happen. But because it did, now we have to start looking at a possible double top. Also, I will say this: in the event that the dollar yen breaks that 116.35, that these highs right here, if we do break that, then we should make a run for that 117. And you can't, if you're long the dollar yen or you're bullish the dollar yen, you can't give up on it yet. The reason why I say that is we are in an ascending channel, and frankly, we could be developing a bullish wedge. And we just tested the bottom end of that wedge on Friday, following that news about Russia, possible news about Russia, and then freaked the market out. We tested key support, and it allowed fresh buying to come in for an eventual break above this wedge. So I see the moves. I see what happened on Friday. It doesn't really, change my overall view. But, if you're thinking, oh, the euro is going to break above 115, have the probabilities dropped since Friday? Yeah, because of, things erupt in Russia. It's going to have probably a predominant effect on the euro. But that doesn't mean that that's necessarily going to happen, because, we are dealing with Putin and Russia, right? So anyway, guys, like I said, it's a very, guys and gals, it's a very, very fluid situation, and we have to be paying very close attention. And let me just say this: if you like what you see here, hit the like button down below, click it, and that just tells myself and the rest of the Forex Analytics team that's working over the weekend to get this video out to you that you really appreciate it, you like it, you want to see more content like this. And subscribe to our channel so you don't miss any of the free content that we put out each and every trading day. And then I also want to mention, if you haven't registered for the daily F.A.C.E webinar, you can do so in the link down in the description of this video. Sign up, come join us Monday morning, because like I said, things could have changed dramatically between the time that you watch this video and that F.A.C.E webinar comes up Monday morning, because I'll be there with the rest of the Forex Analytics team. We'll be there too. And remember, on Tuesday, we have this surprise announcement that we're making as a company. The link to get to this webinar is in the description as well. Make sure you register. It's going to benefit you. For those of you that did register, if you didn't register and you said, oh, I'm going to just catch up on that a week later, it will matter. All right. So make sure you register, and even if you can't be there, so you can get the recording sent to you and see what we have to say. So guys and gals, I want to say thank you on behalf of the Forex Analytics team for being here with me. Thanks for spending your precious time with me and our team. I'll see you Monday morning on the F.A.C.E webinar. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.